A very good evening. Thank you for joining us here. You're watching Business at 9. I'm Nivedna Prabhu, and our top focus, External Affairs Minister S. Jaishankar stressed the need for fair and transparent economic practices that benefit all amid the Donald Trump tariff threats. Now, speaking at the virtual BRICS summit, Jaishankar said the group should focus on building a more resilient supply chain, especially at a time when multiple disruptions are affecting international trade. But what exactly did the External Affairs Minister say on free trade at the BRICS virtual summit? Let's listen in.
The world requires constructive and cooperative approaches to promote trade that is sustainable. Increasing barriers and complicating transactions will not help. Neither would the linking of trade measures to non-trade matters. The BRICS itself can set an example by reviewing trade flows among its member states. Where India is concerned, some of our biggest deficits are with BRICS partners, and we've been pressing for expeditious solutions.
All right, from that, let's move on and take a look at how both the global and Indian markets have performed today. As far as the Indian markets are concerned, the market ended the day with minor gains as Nifty managed to close about 24,750, slipping over 100 points from the day's high. In fact, the Nifty Bank also managed to hold on to green, led by Canara Bank and AU Bank. Broader market outperformed as both mid-cap and small-cap advanced a second consecutive session. The Nifty Auto was the top sectoral gainer as GST rate cut boost continues for auto stocks, while Nifty IT was the top sectoral loser, falling for the fifth consecutive session, dragged by Persistent and LT Mindtree. Now, that was, of course, about the Indian markets, but what is Wall Street looking like? Let's take a look, because stocks start the week on a largely positive note as Wall Street eyes key inflation and jobs data. In fact, putting that into perspective, that could shape the Federal Reserve's path on interest rates. Now, the S&P 500 and Nasdaq are trading higher when you're looking at the numbers. In fact, for S&P 500, currently trading at 6,505 with points of 23.97 and with a slight uptick of plus 0.37, while the Dow Industrials inched lower. So you're looking at Dow Jones, which is currently trading at 45,482 points, change of 81.73 with the slight uptick of 0.18. But Treasury yields are falling, extending, remember, Friday's rally after weak job numbers had come out and fuel expectations of a rate cut next week. Now, markets see a Fed cut as almost certain, though the size and whether more cuts follow is still in question. But as far as all the key events are concerned for tomorrow, my colleague Rabinder joins us with the same. Let's listen into him as to what we have to look out for.
Well, yes, on September 9, Nifty weekly expiry is scheduled to be held, and apart from this, several other companies including BLS International, Dilip Buildcoin, RBL Bank, GSFC and Steel Authority of India will trade their ex-dividend on September 9, and it is also last day to buy shares of Astra Microwave, Campus Activewear, Force Motor, Gujarat State Petronet and PNB Glitz to be eligible for the dividend. And apart from this, on September 9, some of the EGM is scheduled to be held for like 5-star Business, Deepak Fertilizer, GNFC and VIP Industry on the same day. And among global events including ECB Governing Council member Frecois Villore de Galejo is scheduled to be speak. And lastly, Apple is expected to unveil its iPhone 17.
All right, Ravinder, thank you for joining us with that. But let's also tell you that SEBI will hold its board meeting on September 12th with a packed reform agenda, including extended timelines for companies to meet the 25% minimum public shareholding norm, a move that could ease pressure on new listings. Meanwhile, mutual funds may get flexibility to enter non-core businesses, with asset managers allowed to offer advisory services to pooled funds. Listen in to Ankur.
Yes, sources say that SEBI board meeting is set to meet on September 12, when we understand that MPS norm is likely to be on agenda of a SEBI board meeting. Remember, there was a discussion paper which was released by the market regulator, in which the proposal was that especially for large IPOs there should be relaxation. Currently 25% dilution should be there in 5 years, and that may be extended till 10 years. And even in the categories there was a relaxation, and the amount was specified as per the threshold. Apart from that, we also understand that strengthening governance of MIIs is also one of the agenda which may be there for the upcoming board meeting. And new single window system for low risk FPIs is also being considered, which is termed as Swagat FIA. And this discussion paper was released more than a month ago. And after the comments which have been received, we understand that a final approval may be there by the board of SEBI. Apart from that, AIF's flexibility of accredited investors in large value funds is something which SEBI board may consider this time. Also, sources say that we need to wait and see whether or not the criteria of increasing the threshold of block deal window is also considered by SEBI board this time.
All right, let's shift our focus now. Founders of metal component engineering firm Nash Industries are seeking to sell a minority equity stake in the company to a potential private equity investor. In fact, sources inform ET now that 3 PE firms have put separate and competing non-binding bids for a holding in the Bengaluru-based firm. Anurag Joshi with the details. Let's listen to him.
Nash Industries founders are planning to sell a minority stake to potential investors. Nash Industries is a metal component engineering firm that's based in Bangalore. And sources have told ET now that 3 private equity investors have shown an interest. They have submitted non-binding, separate, competing bids for the minority stake. And these PE firms are EQT, Kedara Capital, and Temasek, which have put non-binding bids. The company manufactures metallic components across various industries such as defense, aerospace, healthcare, and also banking. Sources have also told us that Avendus Capital is the advisor which is managing the sale of the minority stake by the founders. And initial discussions are ongoing between the founders and the bidding PE firms. In terms of the value of Nash Industries, currently that's 2,100 crores. And if you just look at the financials of the company in FY24, and this is according to rating agency CRISIL, the operating income was 1,235 crore, and that compared to 1,116 crore in FY23, and the profit after tax was 77 crores in FY24 versus 94 crores in the previous year. The company was founded in 1971, and this potential investment is coming at a time when private equity investments into Indian assets are soaring. And this is happening at a time when the country's growth rate in the April-June period, if we see, that was 7.8%. In fact, Kedara last year, they closed their biggest fundraise. That was $1.73 billion. EQT in June flagged that it has a target of 23 billion euros for its latest fundraise. Temasek is a Singapore government-owned investment firm, so it usually invests out of its balance sheet.
All right, time for a quick break here on Business at 9. But on the other side, I decode for you the latest as far as the situation in Nepal is concerned, and also what you can look forward to as far as the Great Indian Amazon Festival. Don't go anywhere. We're going to be right back. Welcome back. You're watching Business at 9. Now let's put the spotlight on how GST changes came at the right time and will spur consumption. That's not what I'm saying. That's the word coming in from Amazon India head Samir Kumar. In fact, in an exclusive conversation with ET Now Sumita Karir, Samir spoke of the impact of GST reforms on festive sales, plans for quick commerce expansion, and of course the target for exports from India. Here's a slice of the sale. Listen.
That our focus, if you look at where are we expanding our network, tier 2, tier 3 cities have been focused. Like if you like Hubli and Vizag and Kochi are some of the cities that we are building or expanding our network into, because we didn't have very fast delivery to those cities. So we are going to expand that. So even for Prime Day, for example, most of our new Prime customers that we signed up came from these smaller towns and cities. So we are seeing adoption of e-commerce and people coming online and shopping online across the country, especially from tier 2, tier 3 cities. In terms of GST changes, we are really excited about, like it came at the right time, and hopefully it will spur consumption. But we are also very hopeful about how it's going to help the seller. The GST Council met. There's not just about the reduction in the rate, the slab rate, but also how much the government has listened to us around, let's make the life of selling online easier for all our sellers. So if you go into the details, there's so many of those changes that we are excited about, which will make the life of a small, medium business selling online much easier. And I'm really excited about the long-term impact of those changes.
Right. So when we talk about Amazon now, which is essentially a quick commerce platform, this is the new baby, new kid on the block. And I think all the companies, they want to sort of make the maximum out of. There are incumbents, there are new companies as well. But in terms of your expansion, I believe that the Bengaluru pilot is no more a pilot, it's fully functional. And so is the Delhi project, that pilot.
Yeah, I would not, we were never in a pilot. We were making sure that the first stores that we launched, they worked really well. We always take a customer backward approach. We had to make sure that things were working well. So we spent time honing that. And once we did that, after that, it's a hockey stick. We are expanding very rapidly. And some of them, like we are launching stores every day now. So these micro-fulfillment centers are getting expanded. And as soon as a small FC or the mini FC or the micro FC is ready in a neighborhood, we light it up. So stay tuned. Like if you don't see Amazon Now icon on your app, hopefully in the coming days in Delhi and Bangalore, you'll definitely see that. But it goes beyond that. It's going to start going. So it's not just Delhi that we are talking about. If you live in Gurgaon or you live in Noida, so it's entire NCR that we're going to cover. And it's going to happen very soon. Like we are, and stay tuned for the rest of the country as well.
So what are the timelines? What are the timelines that you're working with? And which city is going to be next on your radar as your priority
we can talk about that right now.
Because Bombay is feeling left out. Mumbai is feeling left out.
So we'll have the plans for all the cities. Stay tuned. You'll see all of that happen very quickly.
All right, moving on, it's raining price cuts in the auto industry as players, remember, look to pass on the benefit of the GST rate cuts to buyers. Now, from Tata Motors and M&M and Mercedes-Benz India, major players have announced cuts of anywhere between 90,000 rupees to 11 lakh rupees. But when will these start trickling in? And after all, who will bear the burden? Shrishti, my colleague, joins in with the roundup. Let's listen to her.
With respect to autos, a very interesting announcement coming in, and as expected, the companies have announced their price cut. Across the board, we have seen the price cut announcements starting from M&M. The price cuts as high as 1.6 lakhs across the model that we have seen. That will be applicable from 6th of September itself, and that's a very interesting move and a bit of a standout versus some of the other peers as well. Take a look at Tata Motors passenger vehicle division. Discounts as high as 1.6 lakhs across the range is what we have seen. Commercial vehicle too will have discounts up to 4.6 lakhs across segments. Hyundai Motors up to 2.4 lakh across models. It is Toyota as well, where discounts range as high as 3.5 lakhs. And along with that, some of these luxury car makers have also come out with their discounts and announcements on that. And that is ranging to BMW India, where the price cuts are as high as 11 lakhs, and even Mercedes-Benz up to 11 lakhs on select models is the price cut, is what these companies have announced. So across the board, we have seen the price cut announcements, definitely on the expected lines, but interesting to note that select companies like M&M, they are pushing the price cuts even before the effective date of 22nd of September. But the question remains that who will bear the burden if the price cuts are applicable before the 22nd of September. As per our chats with the dealers and the analysts, we do get to understand that it's the OEMs as well as the dealers that will share the kind of the price cuts that have been announced, and that is with respect to the compensation cess adjustments, because do remember the inventory that is still lying with the dealers already had that compensation cess factor, and that has to be adjusted, which will not be done after 22nd of September. And in order to clear and liquidate that inventory, this step is being taken with which is indeed very positive at this point in time. So a whole host of price cuts announcement by the auto companies, but the question remains, what happens to compensation cess?
All right, my colleague Shrishti did put that into perspective, but let's also find out, when you're talking about how this will come into effect, how do experts look at it and how have they decoded the same? Listen in.
I really appreciate some companies who have actually come forward and who are trying to share the burden with the dealers. I think it's a great way to go, but not every company has come forward, which means that the dealers need to bear the brunt of this compensation cess, which I think is extremely unfair. We've been talking about 21 days inventory in FADA for the last more than a year. And manufacturers have been dumping vehicles on us, which have gone to 55 days, in certain cases, up to 3 months. So we are not the ones who ask for the stock. The manufacturers have put the stock on us. So the onus also is on them to take the burden, the majority of the burden on this, of the stock and the cess available therefore, and help the dealers out.
So there are some OEMs, but very rare, who are coming forward and giving customers the benefit of GST cut even today, which is 14, 15 days before, so that if they have interested, they can buy that and it will help us reduce the inventory with us. It's a turnover game, not a per vehicle margin. We work at a very low, thin margin percentage. So covering 10% for any of us is difficult. So it's a joint effort where we are trying to insulate ourselves with this. Cess is a mess thing, but let's hope that things change with the government coming up in 2-3 days or 4 days of our follow-up on this.
All right, let's also keep the focus continuing with the auto sector, because ET now learns that TVS Motor Company will roll out the entire cost benefit of its GST rate cuts to the end customer. Now, that's the word that has come in from Gaurav Gupta, president of the company's two-wheeler business, who spoke to Jude Sanat, my colleague, along the sidelines of the TVS Apache's 20-year celebrations. Yes, it was launched 20 years ago. Now, Gaurav also said that the company was prepping for its best Diwali ever, even as it continues to navigate the rare earth crisis. Here's a slice of that conversation as well. Listen.
We are seeing the GST benefits being reduced from 28 to 18%. As we speak, the guidelines, based on the guidelines, our teams are working out the details. Right. But of course, we will be honoring in full spirit, as well as making sure the consumers have a very, very fantastic, great festive season.
Right. Great timing as well. The festive season, of course, like you just mentioned, is well and truly upon us. What's the outlook like as far as sales are concerned? Massive impetus by way of the GST rationalization announcement. Many goods have now seen a downward movement in terms of the GST slab. Gaurav, what are you expecting from the great Indian festive season this year in terms of sales?
Well, we were already looking forward to a great festival season. If I were to talk before what we just heard a few days ago from the GST Council as well as from the Finance Minister, we were seeing, and we have seen, a great monsoon this year, 104% plus over the long-term average. We've seen great level of waters in the reservoirs. The macroeconomic fundamentals remain strong in the country. The repo rates have been encouraging. On top of that, what we are seeing now is this bonanza. So, it is going to become good to great, and we're looking forward to probably the best Diwali ever and building it up from there.
Before all this good news came, I think one big concern that both the company and multiple players in the automobile space were discussing was this whole rare earth metal business, in terms of how supply chains were getting strained on account of the Chinese problem, with TVS even going on a record saying that alternatives will have to be looked at. With China now easing curbs on exports to India with regard to rare earth metals, does the plan to look for alternatives continue as far as two-wheelers are concerned?
Well, I would say that we bring back the focus on Apache today. But still, to answer you on the question, I think we are still not out of the woods as of now. Everyone, and we also, are looking at developing alternative ways, technologies to be able to address it. It is still a day-to-day, a week-to-week approach in terms of how we are managing it. And we are very confident that as per the, the support that we're getting from all the stakeholders, the government as well, and the guidelines, we should be out of the woods hopefully very soon.
All right, so much clearly happening in the auto world, and we'll continue to keep you ahead as far as that's concerned. But let's also put the spotlight on how lower GST on fertilizer raw materials will likely reduce the subsidy burden for the government. This is according to sources. Prakash Priyadarshi joins with the details. In fact, had filed this report earlier. Let's listen in.
The government sources are indicating that the reduction in GST on fertilizer raw materials likely to bring down the overall subsidy burden for the government. A very significant development coming in. In fact, the anticipated higher subsidy outgo may ease amid high raw material prices in the international market, which have increased more than 14% in 2025 compared to 2024 levels. Along with that, we're given to understand that reduction in GST may also help the government in early elimination of urea imports, and that will help and that will lead to subsidy savings for the government. You are aware that the GST Council has reduced GST on various fertilizer raw materials to 5%.
All right. While